Hi, this is Jay Norris, author of Mastering the Currency Market. Also, I'm the host of Live Market Exercise on Clovernest.com. Welcome to the report. Before we get to the charts, I do need to point out that trading futures and Forex is a risky endeavor and not suitable for all investors. The charts we're looking at are real-time market snapshots today and may not necessarily be replicated going forward. First market we're looking at is the Australian US dollar. You can see the Aussie USD now broke down to the bottom of that pennant that it's been in. What can you say? Flip a coin. You know, we've been in this, the cone has been continuing to narrow now for 2 months. We try to make it interesting, but it is what it is until you get some clear indication of which way it's going to go. There's really nothing to do, so it's kind of move along, ladies and gentlemen. Nothing to see just yet. Time will definitely will tell us what to do, though. You can see the daily's down, the weekly's still up, and I sound like a broken record. You're still in that this pennant formation, and we'll have to see what happens. The Euro US dollar coming up. Here's another rock in a hard place, right? We called the top there with that 33% correction, and it hit there to the penny, and now you had a sizable correction, and now you're coming up on support. And that's what markets do. They range between structure. You hit resistance, it hits the resistance, it turns around, it goes to support. So we'll have to see what happens. Truly, you're coming up on a Friday. A lot of times Friday you'll see a counter trend move like that. It's really not that interesting for me until you break one way or another. So for now, your intermediate term trend is still higher on the daily. Your short term trend is down on the daily. The weekly's up, as you can see the white line there. So next market, the pound US dollar. Now here we get some definition. Now this is a market where you're probably in the, well, you're closer to an intermediate term trend shift. Let me see how far you are away from a 382 retracement. Shucks, you're right on top of it. Again, I think you probably have more. You probably have more downside here. You still, however, have this is a. You still have to shake this pattern, despite the trend line. We put a lot of weight on trend lines for sure, but you still have to shake off this. You'd have to get below this higher low. This is a higher low to here. This is a higher low to here. Currently, this is still a higher low to there, just barely. So the pattern is still one of higher lows. Here, this is probably more representative of your trend line now, given you only need 2 points on a trend line. Well, you're still through it for sure. Could be some more downside here in the pound. Next market, dollar CAD. A big dollar rally today. You're seeing the big dollar rally up. You shift the daily back up. Actually, how many times have we seen that? The monthly, weekly stay lower, but you get a daily shift. So you may get a short covering rally here. Well, I'll tell you this. The dollar rally there could be more here than meets the eye initially, because you're so early into this move. If the majors break down, well, I tell you what, if they have another day like they had today, put it that way, one thing I didn't mention there amongst the structure and support lines is the momentum. The momentum is down very hard for these majors today. And even though, yes, they're just in some cases, and the Aussie's just getting to the bottom of the pennant, and the Euro is on that long-term trend line, the momentum is down hard. So let's say this: if you had another day, like if you had 2 days in a row like you had to today, I think then you'd start to wake up. You'd start to squeeze out a lot of dollar bears. So let's put it that way. Pretty good momentum on these moves. Dollar CAD, I don't think he goes so far there. I mean, I don't think that long dollar CAD wouldn't be your way to play a serious correction in stocks and asset class markets. I don't think. Could be, though. Here's the chief. Dollar chief. And here's another one where despite the obvious and overt weakness in the European currencies, um, despite what looks like dollar strength, you're really not seeing dollar strength in this pair, are you? I mean, you closed in the green. I mean, the candle's in the green today, and it's still kind of pointed higher, but the weekly's still down. Your counter trend between the weekly and the daily, essentially. So you're not really seeing overt dollar strength there. Here's dollar yen. The currencies are missing a lot of action, and you're seeing a lot of action in stock indices and the U.S. bond market too. Whereas the currencies weren't all that active considering everything that was going on in the U.S. stock market today. Here's another one, rock and a hard place. The daily's up, but the weekly's still down, although that weekly's starting to give. Here, this is interesting. If you can get that MACD above 0, that might be indicative of an intermediate term trend shift. This trend is a lot more than an intermediate trend, isn't it? So look at how close you are to a potential long-term trend shift here. I have to go all the way to a weekly to show you where that trend line came from. So that would be big. That'd be an intermediate term trend shift of a weekly trend line. That, guys, ladies and gentlemen, if you continue to see weakness in the euro, you'd almost get default dollar strength here. So you may spring this guy, but you're still a ways from popping that guy. You're still way down. You're still well below that weekly line. So I guess that weekly line would be your upside target if you're able to creep out above this resistance line here. So pretty fascinating. Now here's the S&P 500. Here's where a lot of the damage was done today in asset class markets for sure. And this is where they really put the boots to the Aussie today because of this big sell-off here. There you go. You can see you're at the top of the pipe, what we call that. Let me get that out of the way. Here's what matters. You're still up on the monthly. Now this, which had been a pennant, is a flag now. So this market's flagging lower. You're still at a point where that's all it could be, would be a bull flag here. I'll put the... And we can get rid of this now. So, here's the bottom, the monthly line. That dovetails perfectly. So here's the U.S. stock market. Here's a bull flag with the monthly line representative of the bottom of the flag. So if you get below that monthly direction line, you probably have more than just a correction. For now, that's all it is. I mean, it's similar to time-wise anyway to this guy back here. Remember that bull flag back in November? So very similar in length to that anyway. So we'll have to see if the long-term support holds here. And that's the story across even the currencies too, where long-term support is being challenged. Intermediate-term trends are shifting, but until you can shift that long-term, you're really not going to get too many longer-term money managers or players to take notice of this correction just yet. We'll have to see if it becomes more, though, as always. Hey, let's look at the dollar index, and then we'll sign off. Well, there you go. I tell you what, the best way to play the dollar is through this dollar index or short the euro, basically. If you want to play long dollar, just short euro. That's really what it comes down to. Because these dollar pairs aren't doing any good. Dollar yen, dollar chief, dollar CAD, big deal. They're up a little bit. But here, the straight dollar index is been the best vehicle. The futures contract is the best vehicle to play the long dollar. Certainly this time up. Or short the euro. So there's your dollar index. Looking pretty good, isn't it? People wouldn't take much to shift that weekly, so we could be in for some dollar strength. Hey, thank you very much. My name is Jay Norris. Check us out at Clovernest.com. Come and see us in the live market exercise. And we thank you for taking the initiative to view the report today. And we'll catch up with you Saturday morning. Saturday, we take Fridays off, and we'll do a weekly wrap-up for you late Saturday morning. So check back then. Thank you very much.